We believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Welcome, you're watching Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me is Cheryl D'Souza. And Cheryl, the policy day, the markets were not having that great of global cues, but in spite of that, not great commentary coming in from the RBI policy where we say the FY23 GDP guidance has been cut to 6.7% versus 7% earlier, and even the stance has not been changed. So
6.8% to be very precise for the growth number.
Yeah.
From 7% earlier is what the RBI had done. But yes, like you were mentioning that the governor's statement, the tone of it actually, what the market participants seem to be actually talking about is more hawkish than expected. But let's listen out to what the Prime Minister has to say ahead of at the monsoon winter session.
भारत के निर्माण का कालखंड तो होगा ही, साथ ही भारत इस दौरान विश्व के भविष्य की दिशा तय करने में भी बहुत अहम भूमिका निभाएगा। आदरणीय सभापति जी, भारत की इस यात्रा में हमारा लोकतंत्र, हमारी संसद, हमारी संसदीय व्यवस्था, उसकी भी एक बहुत महत्वपूर्ण भूमिका रहेगी। मुझे खुशी है कि इस महत्वपूर्ण कालखंड में उच्च सदन को आपके जैसा सक्षम और प्रभावी नेतृत्व मिला है। आपके मार्गदर्शन में हमारे सभी सदस्यगण अपने कर्तव्यों का प्रभावी पालन करेंगे। ये सदन देश के संकल्पों को
And that was Prime Minister Narendra Modi addressing the House. Remember that from today, they've kick-started the winter session of the Parliament, actually. And apart from that, earlier you also have PM Speak saying that they are expecting to discuss key issues in the winter session for a country's growth. Also, he spoke about the G20 presidency, saying it's just not a diplomatic event, and it is a big one indeed coming in. Remember that India is going to be holding the G20 presidency for the next 1 year. But let's talk about the markets then, and like I was mentioning and where I left it is the fact that it looks like the markets are not too happy with RBI governor's statement coming in. The tone they may have felt was a bit more hawkish than that was expected. Like Shrishti was saying, you have the GDP growth figures for FY23 that has been revised downwards. So 6.8% is what we are expecting, or the MPC or RBI is expecting the GDP growth to come in for FY23 versus 7% earlier. Inflation forecast has been left unchanged at 6.7% for the entire financial year. No doubt what the governor also said that he will, or that the MPC and RBI will keep an Arjuna's eye on inflation, and that is the benchmark indices for you. A lot of banking names also under pressure in today's trading session, especially the mid-tier banks like Federal Bank, RBL Bank, Canara Bank. All of them have fallen off their day's highest point, as you can see on your screen, 2% downtick coming for Federal Bank. Also take a look at what Paytm also is doing in today's trading session, because Paytm also has fallen off the day's highest point, because while RBI governor was mentioning about UPI as it's emerged as the most popular retail payment system in India, they've also announced that UPI will be enhanced by single block and multiple debits as well. And Paytm off the day's highest point, near the day's lowest point, 1% downtick coming in. But you know, Shrishti, this is how the markets are reacting to the governor's statement, the MPC outcome. But we are going to talk about the realty sector, right? Because realty sector is definitely in focus. We've seen some sort of up move coming in on most of these names, a lot of interest coming in. And what's very interesting is the fact that despite you have the interest rate rising, the stamp duty registrations have not decreased at all.
Well, yes, absolutely, Cheryl, and that I feel is the silver lining amongst all the news flow that we are having, because on the back of the rate hike that we have witnessed, there's always a scenario where we say that the EMIs on your house loans get increased, because if you say the 35 basis point hike that has been done, that increases your repo rate to 6.25% and your EMI will get increased. But what we get to listen from the experts is that till the time rates remain below that 8.5 to 9% of the mark, the impact is expected to be moderate. But on the other hand, like you were mentioning, that even the stamp duty news flow is having not that great impact. Apart from that, even if we see some of the reports like from Knight Frank, they are seeing that the luxury space in India is expected to get stronger in the times ahead. And we are seeing that post-COVID, the need to have your personal home has enhanced even more further. But it's time to talk about the realty stocks. How are they shaping up? Because in the recent past, we have seen a great move coming in on these particular counters. But nevertheless, in this repo rate hike that we have witnessed today, there has been a fall, a bit of nervousness in all of these counters.
Absolutely. But let's take into consideration for the last 1 month, as the graph was indicating, that these counters have seen an uptick, and that's the reason why we will talk about realty sector. And it's just pure coincidence that today we also had the MPC meet outcome coming in. But there you go, realty sector in the last 1 month, some sort of an uptick coming in for those particular counter, be it DLF, be it Oberoi Realty, be it Godrej Properties, Macrotech developers, all seeing an uptick. So let's bring on board experts today. We have Avinash Gorakhshankar as well as Kunal Bothra joining us on the show. Very good afternoon, or rather good morning to you, Kunal, as well as Avinash. And Avinash, like we were talking about, the realty sector, you have the interest rate rising, and as a consumer, and the first thing that you will think about is the fact that if in a rising interest rate scenario, you are likely to see a dip in demand, at least for the realty projects, given the fact that you will have to pay higher interest rates on your EMI. But the stamp duty registration picture is completely different. It still remains extremely buoyant. So in that scenario, keeping in mind the way how the situation is on ground, do you think it makes sense to look at realty sector as an investment bet in a stock market?
Yeah, I think, good morning, Cheryl. Yeah, I think real estate sector is very closely linked to the interest rate cycle, and I think you're right in saying that EMIs would definitely get a bit expensive. My sense is, Cheryl, that in the very near term, demand continues to be extremely robust. We have been talking to a lot of real estate builders like Lodha, DLF, smaller players in NCR like Anantraj. Demand is extremely strong, and I think registrations continue to be very rock solid. My sense is that at least for the next 2 to 3 quarters, pockets like Mumbai, pockets like Delhi, NCR, Gurgaon, I think would see a lot of demand coming in. A lot of inventory which was lying earlier has got eased out. So I think despite the interest rate hike, I think, this kind of market, if it gives an opportunity, I would be more positive on larger players like a DLF or a Godrej Properties, even smaller players like Anantraj. Clearly, I think for the Mumbai market, it would be Lodha and Oberoi Realty. So I think one can obviously take a slightly longer term view here, because I don't think the real estate market is going to show any signs of weakness, at least in the near term. Plus the kind of focus on affordable housing and expectations that in the budget, we could get some better announcements for infrastructure housing. That is definitely going to keep the real estate stocks buzzing for some more time.
Yes, the budget is just a few months away, and that could keep the real estate stocks buzzing. But Kunal, coming to you, recently we have been discussing about realty stocks with you. What's your view on that? With the dip that we are seeing today, is this an opportunity to accumulate any of these counters?
Yeah, I think I would assume so, because I would believe most of these real estate stocks, and I'm talking specifically the likes of DLF, Oberoi Realty, I think these stocks have come out of a big consolidation for themselves, heading towards a breakout for these names on the weekly charts, as well as now confirmations coming back for the monthly time frame as well. So of course these stocks would probably look very attractive from a long-term play. And when the market gets into a risk-on mode, the sentiment becomes more positive, where there is a lot of risk appetite or appetite to take higher risk. That's the time when you see these high beta spaces performing pretty well. So would be bullish on real estate pack. Oberoi Realty and DLF would be the two top names which I would select at current levels.
Okay, so those were the fundamental triggers, as well as which are the stocks that are looking great when it comes to the technical charts. But with this, viewers, it's time to slip into a short break, but get ready, because just after this quick break, we'll be taking up your stock queries. So stay tuned.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites.
Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all your stock-related queries. But before we get on to your queries, let me put the spotlight on what should retail investors do in order to protect their wealth. Avinash, we've seen the markets hit record high levels, and now they've cooled off from those levels. In this particular market scenario, how should one protect the wealth that they've already created?
I think, Cheryl, one thing is very clear that I think one needs to regularly put some profits in the market, because I think typically what retail investors do is they don't sell at the right time. So I think booking profits regularly for some part of the portfolio is also equally important, because that increases your margin of safety and obviously allows you to deploy cash in some new investments. So I think profit booking is also extremely important as buying stocks, and I think trying to give some time to their investments. I think in this market we have seen that stock prices have been very volatile. So I think this is a good time to accumulate quality businesses at good prices, and I think keep the horizon a longer term kind of perspective, because I'm quite confident that coming year, we should see better levels for the market, for the index, and overall corporate earnings growth. The management commentaries have been very solid. So I think it's a buy on decline market, but with a long term horizon, and obviously keeping in mind that regular profit booking actually adds to the cash flows also.
All right, so that's the view coming in from Avinash. What should retail investors do to keep their wealth intact? But with that, let me kickstart with the query segment then. And remember, viewers, this is a show where we get you answers for all your stock-related queries. So write into us. We are live on YouTube, Facebook, as well as on Twitter. Or you can write into us on the WhatsApp number that's flashing on the top of your screen. Do remember to mention your name each time you write a query to us. Also mention the stock name that you're looking to invest in. If you have already made the investment investment or the purchase, then do mention the buy price and also the time horizon that you're looking to hold the counter. And if you've not already purchased it, then do let us know for how long you want to hold this counter. But with that, let me kickstart with the queries then. And this one is coming from B.R. Bhatia. And Kunal, Burger King at 120 rupees per share is what he's purchased it. He wants to know what to do with this particular counter. As far as I know, I believe that the name of Burger King has been changed. Isn't it Restaurants brand?
So yeah, it is, and I think it's a decent chart as such. Even though the stock has corrected, most of the stocks have gone through a bit of a correction for themselves. But I believe Restaurants Brands Asia or Burger King's, even the likes of Devyani International, Sapphire Foods, as well as Jubilant Food. These are good charts which one could be looking at purely from a long-term play. So I would suggest a hold on these kind of stocks.
Okay, but moving on, the next query coming in from Mr. Subrata Ghosh from Delhi, and he wants to know the take on two recently listed companies. One is Bikaji and the other one is Global Health. Avinash, in both of these counters, we have seen good gains even post-listing, and Subrata already has these shares at a lower price levels. Good time to accumulate, or one should wait by?
So I think as far as Bikaji is concerned, the company reported its Q2 numbers, very strong operating numbers, both on the operational EBITDA as well as the bottom line. I would believe that Bikaji Foods has a very long runway to grow, so continue to hold on. And as far as Global Healthcare is concerned, hospitals are back in flavor. Finding that specialty hospitals are normally getting better valuations in the market, and I think the trajectory for earnings would continue to grow for the next couple of years. So I think both these stocks keep a time frame of at least 1 to 1.5 years, and I think one can expect a very decent risk reward even from the current levels.
Right, this one is coming from Vimla George, and she's holding 250 shares of TCPL, that's Tata Consumer Products, at the price of 1,275 rupees per share. Wants to hold it for the next 1 year, Kunal, but wants to know if it's a good idea to sell at current levels and enter at lower levels, and if yes, then what levels can she look to re-enter?
I think it's a hold from for Tata Consumers. I think it's a good stock to have in your core portfolio, and if you have a medium to longer term time horizon, then I believe that the stock looks very attractive. It's going through a phase of consolidation, trading above the long-term averages of 50 DMA. Price patterns are quite strong and intact, so I would believe that it's a good time to hold on.
Okay, addressing the next query from Professor Thomas, and Avinash, he's looking to invest into PSU banking names, and the option that he has in mind is UBI, BOI, Bank of Baroda and Canara Bank. And since the start of this year, we have seen stellar rally in all of these counters. Any good name, any good bet for the long-term perspective still to enter?
Yeah, I think my guess is, PSU banking has seen a very dramatic and sharp rise. So I think at these levels, I think he should look at the larger banks like a Bank of Baroda or maybe a Canara Bank. I would be quite confident in the fact that the second half is also going to be equally strong. In fact, with interest rates now going up, the yields are definitely going to improve for most of the banks. And Bank of Baroda has shown a very strong, loan book growth. Asset qualities have also come down. So Bank of Baroda seems to be quite well positioned, and even Canara Bank, which is a large bank in the PSU space. So both these banks he could accumulate, but take a time frame of at least 8 to 12 months. My sense is banking, should do very well at least for the next 3 to 4 quarters. And with a credit growth of almost 18-19%, there are good times to continue for the PSU banks going forward.
The next query that I have is coming in from Sri Kotan, and he's purchased Jyoti Laboratories at a price of 175 rupees per share. And Kunal is saying now he's with 20% profit, so his plan is to hold for the next 1 to 2 years. Should he hold, exit, or accumulate?
I think it's a good time to book out profits over here. You can probably book out maybe 50% profits or slightly higher than that. I think the stock is nearing some sort of a zone of resistance, 210 to 15. So like yesterday, today, I think even day before yesterday, the last 3 days, the stock is trying to scale past about the 210 to 15 mark, but then it's unable to surpass about those levels, which means that there could be some bit of profit booking which can come back into Jyoti Laboratories. So it's a good time where you can look to book out your 20% profits, most of your profits over here, and look to buy back again. So possibly if the stock corrects by to say 185, 190 level, which is a 50 DMA for Jyoti Lab, then I think it's a good level where you can look to rebuy.
Okay, moving on. The next query coming in from Karthik, and Kunal, Karthik is holding 50 shares of Deepak Nitrite at levels of 1,000, and it's more than 100% gains for him. But at one point of time, we have seen the stock touching close to 3,000 of levels, but coming down all the way, but still trying to make a rebound. What's the long-term view on this?
See, I'm bullish on Deepak Nitrite. If you are a long-term investor, then I think you should continue to hold on. Now, what happens is when a stock moves up, more than 5x to 7x in a span of 1.5 odd year, they are bound to go into a time-wise correction. At times, a time-wise correction could last for maybe 1 to 2 years. Sometimes a time correction could pan out to maybe 3, 4, 5 years as well for these names. So it's very difficult to anticipate what kind of a time correction Deepak Nitrite can go through at current levels. But I would believe that it's a good stock which you should have in your mid-cap portfolio. I would suggest a hold.
Right. This next query that I have is actually coming in from TP Vinod. He's writing to us from Salem, and he wants a view on Frident Pharma. He's saying that it's a small cap company, but he's holding about 100 shares at a price of around 250 rupees per share. He wants to know how is the long-term chart for this one, Kunal?
I don't track the stock for Frident Pharma.
Okay. By any chance, Avinash, have you had a look at this one?
See, I think, from a longer term perspective, Frident Pharma definitely looks interesting. I think my sense is, if the investor has a time horizon of at least 12 to 18 months, then I think he can definitely continue to hold on. We have seen a very strong kind of growth and a positive commentary from the management. But since it's a slightly illiquid stock, I would suggest the investor to take a slightly medium to long term view because volatility in the stock price is quite common where the liquidity is very limited. So one can hold on, but definitely, I think from a longer term perspective, in the near term, we will not see any major kind of upside coming in the counter.
All right, so that's the take coming in on Frident Pharma. But on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. But viewers, stay tuned. When we come back, we'll continue taking all of your stock-related queries, so don't go anywhere.
In the world, I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan. I'm a fan.
This is a very insightful question.
Welcome back to Buy Now, Sell Now, and let's keep it going with your stock queries. And admitting the next query from Venkat Rao, he's from Visakhapatnam. And Kunal, coming to you, he has a query on HDFC Life Insurance. He has bought these stocks at a price of 745 rupees a share, sitting at a loss, but he's a long-term investor. What's the view coming in?
Yeah, you can continue to stay put for HDFC Life. In fact, the stock is seemingly, looks like coming out of a big range for itself. And I'm talking of a big range because I think from Feb 2022, the stock had been stuck into a range of 600 to 520 approximately. So almost a 10-12% range for HDFC Life. It seems like the stock is now trying to come out of this range for itself. And whenever that happens, you may expect another 80 rupees on the upside as a potential up move for HDFC Life. So it's a good time where you can look to hold on. I would not suggest an average because even if the stock consolidates away for some more time, you may probably go into a time-wise correction. The stock may go into a time-wise correction. A better price to average HDFC Life would be maybe closer to 540, 550 levels.
All right, I have a lot of actually short-term queries and I found a long-term one for you. Avinash from Nino, Tech Mahindra, he already has 100 shares at a price of 1,300 rupees per share. Do you think it is prudent to average right now for the longer term? He's intending clearly to hold Tech Mahindra for a long term, but do you think now is the time that you can average this one?
Yeah, I think, if the view is slightly longer term in the sense the next 12 to 15 months, if the investor can hold on, I believe, 5G rollout is also going to play a positive impact on Tech Mahindra because they have solid vertical strength in the telecom vertical. And plus they have a large order book, and my sense is that most of the negatives are captured into the price currently. Possibly from the first half of 23, Europe and US, there are some visible signs of some sort of growth coming back again, could definitely play a very big positive rub-off on the stock. So my sense is I think the investor needs to give a little bit of more time here, considering the fact that the headwinds still continue to be challenging, but business longer term is definitely looking solid. So I think he can average, but keep a time frame of at least 12 to 15 months, and then obviously he could expect a better risk reward.
Okay, the next question coming in from Rakesh and Avinash. Rakesh is holding 9,000 shares of IOC at an average price of 95 rupees, sitting at a loss, but he believes that the dividend yield is quite attractive. So he wants a suggestion: continue to hold on or sell off and look out for some other companies and stocks.
I think, Shrishti, for most of the oil marketing companies, softening crude prices is a good sign, considering the fact that a lower crude price actually benefits them in generating a better gross refining margin. So I think if the investor can hold on for the next 6 months, my sense is that unlike the first half where most of the refining companies made losses, the second half could be a lot better. Obviously, December quarter may be a little challenging, but January to March quarter, I would believe that GRMs could improve, the profitability could come back. And I think as crude prices settles down, obviously the throughput, from sectors like aviation, automobiles would obviously give them a big volume push. So continue to hold on, but keep a time frame of at least 6 to 12 months.
Kunal, the next one is coming from Dasarudi, and he has 500 shares of Nalco at 36 rupees per share, 5,000 shares of Ujjivan Small Finance Bank at a price of 28 rupees per share. He wants a target for both of them for the next 6 months, either Nalco or Ujjivan Small Finance Bank.
See, I think both the charts are attractive. Nalco, specifically from the metal pack. In fact, what has happened is for the most of the metal stocks, whether it's Hindalco, Jindal Steel, etc. Many of these stocks which have fallen from their February 2022 highs, they've managed to recuperate more than 50% of the losses. Some of them have even come back to their almost closer to their previous major highs for themselves. But Nalco, on the other hand, has been unable to get into a breakout mode, which means sooner or later the stock would also get into a catch-up rally with respect to most of the other peers. So that's a chart and that's a stock which I believe you should hold on. Maybe closer to 100 mark, 105 levels is where you can take a call whether you want to book profits or not, assuming that level comes in the next 6 months to 12 months. For Ujjivan Small Finance Bank as well, I think that's also a stock which you can look to hold on, trading at closer to 30. The last 1 month has been quite decent for the stock in terms of the returns. So I think on the back of it, I would suggest to hold.
Okay, the next query coming in from Raghuram from Bhubaneswar, and Kunali is holding 500 shares of ITC from a price of 295. On a YTD basis, the stock is up 54%. We all know that one of the most awaited movers of the year. What's the view for the next 3 months? He wants to know from you.
Well, I would be very bullish on ITC even from current levels. Now, the only catch is that after such a steep rally, look at this in the change of stance. At point when the stock was at 230, 240, there was an underweighted, stance on ITC from many traders, investors, etc. Now at 330 plus levels, or just about the 335, 340 mark, the stance has changed, to maybe an overbought for ITC, and that's one of the reasons why I believe the stock is going through a time-wise correction. I don't expect any immediate fireworks for ITC over the near term, possibly in the next 2 to 3 months. But if you can hold on for another, maybe 1 to 2 years, then I believe that the upside potential is significant for the stock.
Right. The next one that I have is coming from Jairaj Shetty, Alkyl Amines and Balaji Amines. Wants to know whether it makes sense to buy these for the longer term. What's the prospect for both of these counters, Avinash, and is it advisable that you buy both of them for the long term?
Yeah, I think the alkyl amine business is a very niche business, and I think both Balaji as well as alkyl amines are undergoing a lot of capex, basically, which will come in FY24. My choice would be to look at alkyl amines because the stock has corrected significantly from its high. We believe that the company has a very strong business model, and somebody who wants to take a 12 to 18 month view can definitely look at nimbling and accumulating it at the current odd levels. But provided the view is medium to long term, in the near term till the expanded capacity doesn't come, we could see the stock move in a very narrow range. So longer term prospects are pretty good. I think one can definitely look at accumulating on every decline.
Okay, the next question coming in from Sandeep, and Avinash, Sandeep is holding 500 shares of Prism Johnson exactly at the current market price. But in the past 3-4 months, we have not seen the stock doing anything rather. What's the view going forward, and what levels to target for the next 3 months?
Yeah, I think my guess is cement is going to be a very strong sector in the next 6 to 8 months. We have been talking to a lot of cement companies, and cement prices have risen. More importantly, infrastructure spending on the ground has started moving up, and the coming budget is also going to give a big boost to infrastructure manufacturing, which in tail would obviously benefit cement players. So coming to Prism Johnson, I would believe that if the investor has a 6 to 8 months kind of time frame, I think 3 months is too short. But definitely there's a lot of flavor in low-priced cement counters, especially where capacities are available and where geographically prices have started moving up. So I would believe that one could expect at least a 15 to 20% upside over the next 6 to 8 months. So I think if he has the share, he should hold on. I think don't make the mistake of exiting early. Cement could be a surprise outperformer in the next, say, 6 to 12 months.
All right. Manish Raju has a query, Kunal. Can he buy IRB Infra and Balaji Industry at current market price for the next 3 to 6 months?
So Balaji Industries, I'm not sure because the stock is still trading with a lot of weakness. IRB Infra, you can look to buy now, but understand that this is a high beta stock and it can give you swings of 15%, 20% in any kind of direction. So you have to be very certain about the kind of risk and the positions which you're taking over here or the size which you're taking over here. But yes, IRB Infra is something which I would suggest as a buy. And the stock is heading towards a bigger breakout point. 300, 305 is the major breakout point for IRB Infra. So I believe a buy and dips opportunity at current levels and then waiting out for that 300 plus breakout could be a good strategy.
I want to start corrected. I'm not sure if I said Balaji Industries or it was Balkrishna Industries. Kunal. Okay.
Yeah, Balkrishna Industries, I think you should look to buy. I think Balkrishna Industries, in fact, over the last 1 or 2 weeks, the stock has recovered quite well from 1800 to 2000 plus levels, consolidating at this mark. It's been a huge underperformer for compared to most of the tired names. And Balkrishna Industries is a quality stock as such. So whenever the stock gets into an underperforming phase, it makes a lot of sense to buy the stock and then wait out for the stock to get back into the leadership as well as the outperformance mode. So I think it's a very good risk reward to buy Balkrishna Industries at current levels as well.
Okay, the next query coming in from Deepak, and Avinash, Deepak is holding 54 shares of Biocon from a price of 314, and recently we have good news flow for the company coming in where they have completed the Viatris transaction with Biocon Biologics. There has been a management change, but no such boost from the stock price perspective. What's the view? Any kind of rebound that you are expecting?
So I think the biologics opportunity is a very large opportunity for Biocon, and I think in the very near term, while the stock may not move up, I think there's a significant scope for some value unlocking for Biocon, because the management has clearly hinted that they could be looking at value unlocking opportunities here. Additionally, the company's subsidiary Syngene has been doing very well in the contract research space. So my sense is that the stock may have not moved up, but I think if you have a little more patience, definitely earnings numbers are bound to show up in FY24. FY23 second half is also going to be a lot better. So I would believe that continue to hold on. Keep a time frame of at least 12-18 months, because this is a slow mover in the pharma space, but definitely tailwinds appear to be positive. So I would prefer to hold and keep a time frame of 12 to 18 months.
Satya has written to us, he wants a short to medium term technical view on Polyplex. He's already holding some shares at the price of 1,780 rupees per share. He's saying that he believes that the fundamentals of the company are good, so he wants to know at what rate that this particular counter can be averaged.
So I think you can look to average at current levels. In case if the stock happens to close at current levels of 1740-50 levels, then it could also form a interesting candlestick pattern, which could indicate that maybe the worst could be behind the stock price in terms of the recent downtrend. And I think if that happens, you can expect the stock to come back towards 1850 levels. That could be the first nominal target. And beyond that, if the stock sustains above the 1850 mark, we can expect a fierce uptrend to come back into Polyplex. So I would suggest a hold.
Okay, that's a hold coming in on Polyplex. But the next question admitting from Dinesh, and Avinash, Dinesh is holding Bajaj Finance from a levels of 67.46, and in the past 1 month the stock is down by around 8%. He wants to know what are the future prospects of Bajaj Finance companies, and it has been a multi-bagger, but going forward, what could be the return expectations from this counter?
I think, Shrishti, Bajaj Finance is one of those multi-baggers which has generated a huge wealth for, its shareholders and investors. But I think recent news flows about, Reliance company Jio Financial Services entering the domestic markets has created a little doubt in the minds of investors as whether competition will hold it up. My sense is that Bajaj Finance will still continue to enjoy very strong profit margins, and obviously with the kind of AUM and the kind of asset quality and the loan book growth delivered by the company, the road ahead is going to be quite positive. I think over the next couple of years, if the investor has a timeline, then he can stay invested. I think he can even average at the current level, considering the fact that financials are going to play a very big role after the banking sector in the growth in the Indian economy. So I think financials would be very much in demand, and I think within that Bajaj Finance would obviously outperform. But keeping a time frame of at least 1 to 2 years is essential, because near term, there are no triggers which could actually re-rate the stock in the very near term.
Okay, the next query is coming in from Anup Gowda, and this one is for you, Kunal. He's bought Tega Industries at IPO price about 1,000 shares. He wants to know how's the short term for Tega Industries looking like to you?
So it's an attractive chart. Again, the history is a bit limited, but then over the last 2 months specifically, I think from September highs or August-September highs, the stock is trying to form a consolidation pattern. It's more like a bullish flag pattern when I look at it broadly over the span of the last 4-5 months. But then from the August-September highs, the stock seems to have confirmed a breakout as well. So I think it's a good chart. I would suggest to hold on to Tega Industries, and I think at current levels of 620 approximately, it could be poised for at least another 40 to 50 rupees on the upside.
Okay, the next question coming your way, Kunal, and this is an F&O query by Manikandan. He has bought Siemens 1 lot of December series 3000 call option at a price of 62, and I hope that he's sitting on good gains, because a sharp move coming in on this particular counter after a big order win. The stock is up 5%, and the other counter that he has is BHEL one of the stocks in your favorite list. He has 95 call option at a price of 1.1 rupees. Please suggest what he should do.
Well, I would suggest to book Siemens and possibly hold on to BHEL. The reason for booking Siemens is because it's a low beta stock inherently, and when such kind of news flow, the stock jumps up higher, it's bound to be that the stock gets into a pause mode, and when you're sitting in a call option, time value or time decay matters quite a lot. So I think it makes sense to book out profits over here. And for BHEL, if you've bought the 95 call option, I would still suggest a hold. Possibly this phase of consolidation, which I just talked of, for Siemens, that seems to be getting over for BHEL, and it could be poised for a breakout back again about the 90 mark.
Okay, so it's a hold for BHEL and book your profits for Siemens. That's the advice coming in. But viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back to admit more of your stock queries.
Question that you asked, Nikunjan, almost seems like you were listening in on the deliberation the committee was doing, and you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunjan. Almost seems like you were listening in on the deliberation the committee was doing, and you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunjan. Almost seems like you were listening in on the deliberation the committee was doing, and you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now,
All right, welcome back. You're watching Buy Now Sell Now on ET Now, and we continue with your queries then. And let me get going with the queries. There are a lot of them actually back to back that I have to go through. And Kunal, looks like you are in demand today because I have been trying to kind of gauge if I have any long-term queries, but all I'm getting is short-term and it's all addressed to you. So next one coming your way, then one is from Senthilville from Bangalore. SIS is the counter that he's holding 220 shares at a price of 456 rupees per share. He wants to know whether he should continue to hold on to this one.
I think you should completely exit these kind of stocks. So, always remember that if a stock doesn't perform in the best of the market trends, and I'm talking of it from the 2020 lows towards 2021 end highs for the markets overall, and if the stock corrects in a phase of correction as well with the same intensity, like what it did maybe some time back, then I think it's a stock which you should generally not keep in your portfolio from a long-term or medium-term play. You should wait out for the points where the stock changes those characteristics. I think SIS is a stock which falls in that category where it's been an underperformer on both the sides of the markets, whether it's an uptrend or a downtrend. I would suggest an exit even at current levels.
Okay, the next question coming in from Hemant, and Avinash Hemant is holding Bajaj Finserv. The average price is 1750, sitting at a loss, but he wants to know the growth prospects for the company for the next 2 to 3 years. What's your view on that?
I think Bajaj Finserv is the holding company for Bajaj Finance, and it also has a significant interest in the general and life insurance business. So I think over the next 2 to 3 years, the insurance business is going to unlock a lot of value. The government is also very keen to promote the insurance sector, and we could see some announcements in the coming budget. As far as the consumer financing business, NBFC business is concerned, that is Bajaj Finance. As I mentioned earlier, the year you got to keep a view for at least the next 2 years because business continues to grow rapidly. The stock is underperforming because there are concerns that Jio Financial could, obviously disrupt the financial services market early next year. But I think it's better to wait and watch. Bajaj Finance is a significantly large player, and I think growth would continue. So for the time being, my sense is, rather than selling in panic, I would believe that, Bajaj Finserv should be held on. A lot of value can be generated over the next 2 years. So please hold.
All right, actually, we have to slip into rapid fire. But before that, let me try and squeeze this one fundamental query because Soumitra has reminded me that he's asked a funda query. And this one is for you, Avinash. He's saying that with the RBI policy hawkish and the impact of growth being visible with the downgrade, that what he's mentioning is that RBI today has actually revised the GDP growth rate downwards to 6.8 versus 7% earlier. And he's saying multiple companies have invested in capex already. Can this mean that these companies are headed for a painful period in the coming year?
No, I think, one should understand that corporate capex has now taken off after a period of almost 8 to 10 years, Cheryl. So I think companies are now pretty confident on incremental demand coming ahead. And I think corporate capex is never done with a short-term view. It's always done with a time frame of at least the next 2 to 3 years. So I think companies which are actually investing for growth are interesting bets because that is where the market looks at for growth numbers, especially on the top line, profitability, on the earnings growth. So I think you should not be bothered about the macro numbers. Focus on specific companies where the capacity and the incremental earnings growth would drive earnings. So, this is something which I think investors should understand. Don't relate the GDP number with the corporate capex number, which has got absolutely no, near-term kind of correlation.
Okay, the next question coming in from Raghu, and Kunali wants to know, is this a good time to buy Infosys or rather Reliance? If not in any of these counters, any other name that you have in mind for suggestion?
I think both these stocks are attractive. Infosys and Reliance, I would believe Infosys is one of the best stocks from the large cap IT space. Reliance is starting to get into that outperforming stage. Even in the last 2-3 days, the stock has corrected. In fact, both of these stocks have corrected marginally. But I would still believe that both these stocks are attractive if you have a time frame of 3 months, 6 months plus.
All right, and with that, we actually have to come to the end of the Buy Now, Sell Now, the entire edition. We don't have time for the rapid fire today, but thank you so much, Avinash, as well as Kunal, for joining us on the show, for sharing your view on the realty space, as well as resolving as many queries as we could. But yes, we had a bit of truncated show today, but tomorrow we will be back at 11 a.m. to take all of your stock-related queries. For now, goodbye from Shrishti, myself, and the team that put the show together.
why is that there was so much of yes, no, I don't know when it comes to the merger? The views were very divided. The management, Mr. Parekh, the management of HDFC Bank, they had to literally go on road shows to convince shareholders that this merger is good. It will create shareholder value.
First of all, rationale for merger. Why?
It is not a forced merger. Let's first clear the air.
100%.
It's not
100%. We have looked at this possibility of a merger not once, not twice, but many times over the last 15, 20 odd years. But in those days, the regulatory cost of a merger was just very, very high. And therefore, every time we looked at it, we just said, let's look at it, relook at it at some point in time. Then came COVID, and COVID obviously for 2 years, everything got forgotten. When we looked at it again in 2022, we found that many things had changed over the last 7, 8, 9, 10 years, which had now made the merger very, very conducive. And to my mind, the merger now will result in a situation where 1 + 1 will be more than 2.
After 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business.
We are what we have called, what I have described, we will keep an Arjuna's eye on inflation, and this is something which I had explained in one of my earlier speeches, and we will be ready to act. Our actions will be nimble.
Inflation remains sticky. That's the takeaway from RBI Governor's speech. The MPC voted 5-1 in favor of raising repo rates by 35 basis points today to 6.5%. Governor Das said that he'll continue to keep Arjuna's eye on inflation dynamics as it remains above the central bank's upper tolerance level.
Shock from global spillovers compels the RBI to revise its growth forecast downward from 7% to 6.8%. The governor says we must deal with global hurricane with confidence, adds that the rupee's movement has been the least disruptive and must be allowed to find its own level.
Siemens is on a tear after it wins an order worth 20,000 crores to be supplied over the next 11 years. Meanwhile, Dhamaka earnings of BKG cheer investors. Management tells your channel that they expect double-digit EBITDA growth to sustain.
The winter session of the Parliament commences today. The government is set to table 16 new bills this session. Prime Minister Narendra Modi urged all parties to make it more productive, asking them to give more opportunities to younger parliamentarians. Hello and welcome. You're tuned into Markets at Noon. I'm Anisha Jain and with me I have Pankaj Poddar. Pankaj, welcome back. We all missed you in the markets. Though when you've come back, it's in the red, and when you were gone, it was at record high levels. I'm not sure what cue should we take from there.
I think we're still around the record high, just 80 points, away, and it's 18,600. It's quite fabulous, right? That's what one can see in terms of the markets. Let's just look at the markets and really how the setup is. 62 points down for the Nifty. Mid-cap index is down 0.3. Small-cap index is down at 0.4, 0.5 odd percent, and that's broadly, we have the RBI Governor press conference starting. First, let's cut across to that, and then we'll do a market check.
MKJ, Dr. Michael Dipatra, Shri T. Ravi Shankar, and Executive Directors Dr. O.P. Mal, Shri Saurav Sinha. We have Shri R. Subramaniam joining us and Dr. Rajiv Ranjan, along with my colleague from Monetary Policy Department. So we have 21 colleagues from the media today. And before I invite them to ask questions, I would request you to kindly give some opening remarks so that we can start off the press conference.
Thank you. Good afternoon to everyone. Happy to have you here. This time in the statement, there was a particular para 15 where I have tried to summarize what exactly are the key takeaways. But nonetheless, I would like to highlight 6 points as the highlights of today's MPC, today's monetary policy. The first is that India's GDP growth is resilient. It is holding on and it is doing well in a world of slowing growth and possibilities of recession across several countries. That's the first point. Number 2, headline inflation is moderating, and in fact, with regard to inflation, I would like to say that the worst of inflation is behind us. I think this point needs to be taken note of. The worst of inflation is behind us. Globally also, the same trend is visible with the moderation in commodity prices, crude oil prices, and several other prices. Third point, while inflation is moderating and while we recognize and we state that the worst of inflation is behind us, but there is no room for complacency. We have to be extremely watchful, and we'll have to be nimble in our actions. We have to watchful and we have to act should it become necessary. So therefore, I said that the battle against inflation is not over because there is no room for complacency. But let me reiterate again, the worst of inflation is behind us. And it is moderating. We have given the inflation path till second quarter of next year. The fourth point I would like to say is with regard to liquidity. We are ready to undertake liquidity operations to inject liquidity, but we will look for durable signs of a turn in the liquidity cycle. Fifth point. The story of Indian rupee is one of resilience and stability. And we remain committed to act to prevent excessive volatility of our exchange rate. And our focus will continue to be on orderly evolution of the exchange rate. The sixth point, the current account deficit is eminently manageable, and let there not be any doubt about it. And to amplify further, the foreign exchange reserves have gone up from 524.5 billion in October 21st to 561.2 billion on December 2nd, and that's an increase of 36.7 billion. Also, as I have stated, the external debt ratios of India are low by international standards. So overall, I would say that the Indian economy is overall status of the Indian economy is that the Indian economy is resilient, and I think this is India stands out as an island of resilience in an otherwise volatile and gloomy world. Thank you.
Thank you, sir, for those opening remarks. To start the press conference, I'll invite Mr. Anand Adhikari from Business Today to ask his question.
Good afternoon, sir. Sir, I just want to know, I'm not going to ask you about the RBI's, terminal rate in the current, monetary tightening cycle, but any estimate of the Fed, terminal rate which RBI has, any estimate there?
You see, the first thing I have to say is that the Fed rate or the terminal rate is important for the whole world, as also India, because it impacts so many aspects, particularly with regard to the, the currency market. But our policies are primarily governed and determined by our domestic factors, the domestic scenario on growth and inflation. It is not a case that we look at the Fed policy rate and take our decision. We take our decisions on monetary policy rate stance based on our domestic factors.
Okay, thank you.
Thank you, sir. I'll move on to Mr. Govardhan Rangan from Economic Times.
Good afternoon, Governor. So you spoke about that inflation, the worst is behind us. At the same time, that we cannot be complacent about that. And in your speech in the morning, you hinted at that it will be data dependent. So if one puts all these three together, if the data does not deviate from the path that you have projected, will that mean that you are closer to the peak interest rate cycle? Thank you.
You see, we are living in an uncertain world. The outlook is extremely uncertain. So therefore, what we will do if it doesn't match our expectations is something on which it's not possible for me to comment at this stage. And so therefore, all that we are saying is that we will keep on monitoring the overall outlook, and as and when necessary, we will act. And throughout this last almost 3 years now, we have acted, whenever it was necessary, proactively, effectively, in all respects, not just with regard to interest rates. When we reduced the interest rates, we were on the, our effort was to act, our effort was to be as nimble as possible. And now, when we have been increasing the rates, over the last, that is since the month of May, we have been also sort of been guided by the incoming data and the outlook. Now, from that, what conclusion you will draw and what it indicates is something which will be your interpretation. It's not possible for me to say that would it mean this or would it mean that.
Thank you, sir.
I hope I have answered your question, but please, understand that we will go by our domestic factors and we will watch the incoming data. We will also, because it cannot be backward looking, data is always backward looking, we will also keep on assessing the future scenario, the evolving dynamics of inflation and growth, and then act. Would you like to add something? Thank you.
Thank you, sir. I'll move on to Ms. Lata Venkatesh from CNBC TV18.
Governor, at 6.25 current repo rate, your forecast 1 year down inflation is 5.2 if you take the average of Q1 and Q2 for next year. So your positive real rate ex ante is 100 basis points.